Okay, so there we go. As usual, guys, we're going to be live trading on Northpeak fund today. So first things first, as usual and without exception, okay, we're going to be going and having this very structured. So let's go into our notes, which is going to be right in here. This is my personal journal, link to that in the description if you're interested. We are going to be having the pre-market, and we want to basically document all of our different things. So first things first, when we are looking at the price action, let's go onto the daily. We want to identify the high time frame bias. Wait, actually, let's go to the nodes. Let's go to pinned, and let's also create a new one. So this is going to be the trading plan. There we go. Okay, so we're going to be creating a header trading plan. There we go. So the first one is going to be what? It's going to be the higher time frame bias. The next one is going to be 50-minute range. The next one is going to be 1 minute liquidity rate. And then what else do we have? Movement candle. Movement candle. There we go. Okay, now we have all of that. We're going to be minimizing it again. Yeah, there we go. So this is going to be our trading plan, and we're going to be executing it flawlessly as usual. So on the daily time frame, where do we want to trade into? I previously said in the last live trading session that is probably already out by the time you're watching this, it must be, that we wanted to trade lower into this. And I still believe the bias holds strong, because if you're going to look all of this, this is rejection, okay? We are rejecting off from, it doesn't even matter what we are rejecting off from, but we are rejecting off some kind of level. Now this can have a lot of reasons. That can be because we have too much expansion. That can have because we have some kind of higher time frame high. So let me just put it like this, swing high somewhere on the left. It doesn't even matter. We can look at it still, but all I really care about is the wicks that are telling me a story right now. We are rejecting, and that's why I anticipate the price action to trade lower. Okay, let's also look at it from a daily perspective. So let's look at everything that is in here. We've traded into that high. Now we are showing signs of rejection, so that's why we want to trade lower. Now also, if we're going to be taking all of this, this is going to be what? This is going to be a massive FEG that we also want to trade into. Okay, this is going to be our FEG. We want to continue trading lower into it. Let's check out. Okay, that was on accident. So let's also check if on the 4-hour time frame. Okay, wait, so on the daily time frame, let's also check, have we traded into a premium to discount? I mean, you can already spot it. We didn't, but here to mark it out for you, we are measuring this out from the last swing point that we have, which is going to be that low and also that high. There's nothing in between. We don't have some kind of swing low that has been created. Maybe on the 4-hour time frame that is going to be a swing low, but we are just measuring this off from the daily time frame. And that's why this is going to be our dealing range. And then here we're going to be having the 50% equilibrium, of course. So yeah, we have now traded back into a discount, so not even into equilibrium. So that's why we also want to trade onto the downside. Now we can further refine this. We already know that we want to trade lower based on the daily time frame, but let's look at it on the 4-hour time frame. There's even going to be more information, because what can you spot in here? That's going to be our no wick candle. So let me mark it out, no wick candle. If you didn't know and you're new to this, no wick candles like to usually get traded into. Now I cannot tell you specifically why, but just based off data, and I've backed at this over a very long time, we like to trade back into the no wick candles, and that is simply why I consider it. A no wick candle is, as the name already suggests, when either the upside or the downside has no wick onto the up or downside. You get my point. Okay, so there's nothing much more to explain into it. So that is going to be another indication. So you see, we are stacking up our confluences. It's not just going to be one thing. You know, today the sky is red, and that's why I'm going to be taking a short. Today the sky is blue, and now I'm going to be taking a long, or something like this. We are basing it off from a puzzle piece. Okay, so we are having the high time frame high that we have traded into. Okay, that is going to be 1. Then on the daily time frame, we are seeing rejection. Okay, that is going to be 2 already. Okay, then we go on to, well, we are staying on the daily. We are taking up our Fibonacci. Okay, that is going to be number 3. Okay, so then we are going to go on to the 4-hour time frame, just like that. 4-hour time frame, we're having the no wick candle. That is going to be number 4. Okay, then we're having the FEG. That is going to be number 5. So you see, this just keeps on going, and you're building an entire framework. So obviously we want to trade on to the downside and not onto the upside. With that being said, now we of course want to find our entry. The higher time frame bias has been confirmed, no question. And I also want to see and emphasize there's going to be another one. So you see, once you have identified the direction correctly, then all of the things are just going to get stacked on top of each other further and further. So the same goes in here. We already want to trade lower, and I found another one, which is going to be the relative equal lows. So you could even say, okay, this is going to be our 6th one. Okay, we want to trade lower. It just keeps on going basically. Now, given also we have a Monday, so if we expect the charts to continue on to the upside, then Monday is a good day to have a retracement, and even the Tuesday have a retracement, create the low of the week, and then Wednesday, Thursday, Friday, we could be expanding higher onto the upside again. That is sort of the classic profile that I see in these kinds of price action moves when we are already trading onto the upside. Okay, so the high time frame has been checked. We are going to be check marking this. Cool. Now we want to look into the 50-minute range, of course, as it suggests on our trading plan. So what do we have in here? For the 50-minute range low, I would say all of these lows, this one is going to be it. Okay, this is going to be our 50-minute range low. So range low, there we go. And then we're going to be having the range high. Now, why am I taking this range high? I'm going to explain it to you in just a second. Range. Okay, so some of you would now be saying, why is it not on top of here of this one? Well, the reason for that is also quite simple, because if we're going to be measuring it off from this one, okay, so let's just say we are going to be having the range high in here, and now we are going to be measuring the 50% area from both of these, so the range low and the range high, then you can see we are very far away from the 50% area. And I've told you many times, you want to be as closely as possible. So let me draw an approximate area of that entire range. It doesn't have to be exactly in here, you know, it doesn't have to be like the current candle is right at the 50%, but it has to be like approximately. Okay, this is going to be your range. Okay, you want to be also genuine with your range, but in here it's obvious like we are too far away from that range, so that's why this is a false range. If we're going to be measuring it from that high, that's already way closer. I mean, currently we are also moving away from it, but you get my point. It has to be approximate. Okay, so now the 50-minute range high has been identified, and also the 50-minute range low. Now we basically want to trade this onto the downside. The 50-minute range has been identified. We're going to be check marking this as well. Now we want to move on to our 1-minute liquidity rate. Okay, let's go into the 1-minute time frame, and I'm pretty sure we already had that. This was a 30, so from this point on, this was a 30 right there. Let me put this in black. Okay, so this was a 30. As you can see, we already had like multiple different liquidity rates in here. So yeah, from this point on, we definitely have also check marked the liquidity rate in here. And now it is pretty much only time for our movement candle. Now there's going to be a couple of scenarios which I want to prepare you. On the 50-minute time frame, if we're going to be continuing on to the upside and we're getting dangerously close to the range high, then it might be worth it considering if we want to push a little bit higher for all of these liquidity points, because on the 50-minute time frame, as you can see, these are going to be nothing but relative equal highs basically. So you can see these are relative equal highs, and if we are damn it, it did not save. And if we're getting really close onto it, then it could also be worth it to wait for a pullback onto the downside and then trade this higher into the relative equal highs. But that is not really going to be the plan, especially because we have done so many different things on the higher time frame. As you can see, if we only had like 1 or 2 confluences on the higher time frame, okay, so let's just say we had the previous day low that we want to trade into, and then also let's just say relative equal, okay, this is really getting messy, we also have relative equal lows, then I would say, okay, maybe we can consider it. But because there's just so many different things, I mean, if we go into the daily time frame, this is just cluttered up. Even though it looks cluttered up, but there's just a lot of information that we want to base it off from. And that's why I simply believe we are having to stick to the buys if it is, well, so obvious with all of these things. So once again, on the 15-minute time frame, we're going to be trading onto the downside, and from here on, it's really just waiting for the movement candle. Okay, so we're going to be waiting for it, and for you, that is probably just going to be a cut. So let's just see. I would ideally have a candle like this one. Okay, this is going to be our movement candle. Now, in the case where somebody would say, okay, you're always comparing it to the last previous candles. Yes, but this candle is already far away. We don't really care about it as much. We don't take it as a reference into our movement candle. Okay, because if you now wait for a candle that is going to be bigger than this one, so it has to be, I don't know, like how big does that candle have to be? Well, then you're probably not going to get a trade that day. Okay, like that is a exceptional big candle, and that is the reason why even having something similar to the size of that entire candle on the left here is going to be already acceptable for us to trade onto the downside. So this is basically something that you should keep in mind. But all of these candles, I'm talking about bearish candles, specifically this one, all of these, this one, this little one, those, they do all contribute into the reference of you understanding, okay, we need a movement candle like this one, or approximately. Now, and if all of this, okay, all of what I've just explained to you, everything does not make sense, then I recommend to you going onto my YouTube channel, and I've just uploaded a new video right in here, as you can see, and it's going to explain to you everything about this exact strategy that we're talking about right now. And in case you didn't know, I've also been by prop firms very recently, but that's another story as well. So going back in here, once again, I want you to basically just pay attention to the movement candle, and we're hopefully going to see it very soon. So as usual, all of these are not going to be movement candles like this one, not this one, not this one. Okay, we need a candle that is going to be somewhat of the size like this one right there. This is going to be our movement candle. I'm going to zoom in for everybody that is watching on the phone. This is going to be the kind of size that we need. Now if we're going to be comparing it with these, that's not going to be one, that's not going to be one, that's also not one, in order to trade onto the downside. And this is going to scare a lot of traders out. We are trading onto the upside, and if you would have taken a short right now, then this is going to be the aftermath of it. Okay, you're just going to get stopped out very soon, or very likely at least, just based on this entire price action move, because at this point this is a movement candle but onto the upside, man. Okay, we are starting to see our movement candle. That's something that I like to see. Okay, so if you're new, the way that it's done, it's kind of weird, but it's also very convenient at the same time. You're just marking out a position, and then you're just dragging it around. So we want to risk, we don't really need a lot. We're going to be risking 1% on this one. Let's just get in with a market order. It's going to be this one. Play short. There we go. Now I'm going to be also a little bit free and dynamic with the stop loss. Like, it is not a big problem in case we're going to be trading a little bit above, because I do expect those highs to be also taken out at some point or the other. So yeah, I'm going to be... Have you recently failed a prop firm challenge, but you know that you could keep the funded account and also get payouts if you just didn't have to go through the challenge phase? Well, you're not alone, because a lot of traders know how to keep funded accounts and also get payouts, but they're not able to pass the prop firm challenge. And that can have a lot of different reasons. Maybe it's going to be time, maybe it's going to be the rules of the prop firm challenge stressing you, but here's where I can help you. I'm going to pass your prop firm challenge in only 3 trading days, guaranteed. And if I'm not going to be able to succeed, you'll get all of your money back, including the fee that you paid the prop firm in order to get the challenge. For more info, the link to that is in the description down below. Somewhat okay if it is in fact going to be trading higher. And yeah, so the reason why we have not gone with a 2%, because initially I wanted to go with 1%. So the reason why initially I wanted to go with 1%, and we are right now on a 200k account, so 1% is 2k obviously, but it has done 1.5k, and that is because I've done a market order, and the original position used to be a 1% risk. So yeah, we are also risking less on this case, and I believe we need 16k. We don't want to push our luck too much on the start trade. Let me see and look at all of this. I mean, we could just aim for the range low, but ideally I would even just go for some internal. Let me see what kind of risk to reward we're going to be getting, and this chart is getting really messy, guys. Yeah, like a 1 for 2 is going to be fine, and if I see really good price action, then I'm probably going to be keeping on holding. The spread is just so good on this prop firm, man, because we are trading with 0. Sometimes even really like raw spread right there, and that is just something you don't get to see on FTMO even, which once again I've been banned by FTMO, so there's that. But yeah, we're going to be seeing how this works out. Okay, so currently we are trading onto the upside a little bit, showing a little bit of a retracement. And also don't mind all of these sounds, these are just some my notification sound basically. We're creating a little no-way candle, but I don't really care about those too much because it's only 1 minute time frame. I do expect, once again, I expect it to trade above these highs. That is a valid scenario, but ideally we don't want that to happen to begin with. And in the case where we are going to be doing that, and I would have to move my stop loss a little bit, then in that case I'm also going to be increasing my take profit, because then we have taken out liquidity and there is a higher likelihood that now we're just going to be continuing onto the downside. And now you might be saying, well, why do you have a stop loss to begin with if you're planning on moving it? The reason for that is because if price, because of some kind of reason, because Trump tweeted some kind of BS or whatever it's going to be, if that happens, then, you know, I'm just going to get out, and I'm not going to get out at a 60k loss, but instead I'm just going to get out at, well, my stop loss in here. That is why I have the stop loss there to begin with. But I am open in always moving the stop, not always, but mostly. Yo, we're starting to see some movement onto the downside right now. So we did reject off this entire level, luckily. Let's see if we're going to be having the continuation lower. We have also broken that entire low. That is going to be the point where I'm going to be moving my stop loss to at least this entire high. Now it's not worth it for us trading higher, and if we do, then we're just going to get taken out. Maybe we're going to be re-entering as well. But yeah, for here, like for this entire price action point, I don't really see a reason in keeping the stop loss all the way high in here. And I always try to minimize my risk. Yo, okay, come on. Just a little bit more. Just a little bit, man. And I keep on drawing a lot on the chart today. I plan on doing that also more often because I think visualization is also very important for you guys. So you see what's up, what I'm looking at right now. Because if I'm now just saying, okay, like the third candle based on the very current one, if you're going to measure it from the one that we have right now and just count 1, 2, 3. So I'm basically talking about this one right now. Then it's quite hard for you to understand that I mean this candle. And meanwhile, while we are already at it, let's do some push-ups. And hopefully until my push-ups are done, the trade has already hit a take profit. Yo, stop here and don't skip this. I got something for you. If you didn't know it, I have been banned by prop firms, which is FTMO, Fund Index, and I've also been restricted for payouts from major prop firms like Alpha Capital. That's why I'm now trading with Northpeak and also Quant Capital. The only prop firms that is not going to restrict you for any of your trading behaviors, because that's the reason why I got banned to begin with. They have their own trading platforms and their spread is as tight as up to 0. With my code StarTrading, you're going to get a 20% discount and also a 100% refund bonus. So if the challenge costs you $500, you're going to get an extra 1k for free after you have passed the challenge. Link to those in the description down below. Still no take profit, man. Okay, come on, Euro USD. Stop being a bitch and just take us out. Come on. There we go, guys. That is just how we're doing it as usual, man. We are going to be journaling the trade as usual. And as always, it's almost a tradition at this point. I always keep on forgetting to check mark the movement candle. I don't know why. But yeah, let's go, man. We're going to be journaling this. Let's go to Northpeak Funded. Ooh. Okay, we're going to be logging in the trade. Let's take the screenshot real quick. Paste it in. There we go. This is going to be the 1 minute time frame. Let's also get in all of the daily information, because there was a lot of information on the daily. There we go. Let's go into the 1 minute again. Now, let's go to the coordinates. It's going to be the price that we have entered at. It's going to be the price. It's going to be the stop loss. It's going to be the take profit. There we go. Confidence 5, like immediately, because I saw a lot of reasons on why we should trade onto the downside. And yeah, this was a no-brainer for me, to be honest. Okay, let's see how many lots did I use for this one. 71.73. Okay, there we go. Wait, 71.73. There we go. This was a take profit. And you see, actually, the pips, like the spread is also so accurate that it says the exact same one, just like, well, on the real one, which is going to be on Northpeak Funded. So yeah, I would say nothing went wrong. And also let's add our, wait, let's remove all of this. Confirmation points for the higher time frame bias. That's why I did not change bias, even in the case where we would have traded higher. Okay, there we go. So let's log in the trade. There we go. Let's go to trades. It's going to be our, what we have so far. So we have taken one at like 3.5k and also another one at 8.2k. And yeah, that is looking pretty well, I would say, for my taste. And as usual, guys, the full strategy is on my main channel. Make sure to check it out. If you want more of these videos, then hit the subscribe button and also the like button. We are going to be having crazy trades. I am on my way passing this 200k valuation because FTMO is unfortunately a bitch. Funded Nexus also a bitch. Alpha Capital is, you know, half of a bitch. And Funding Pips is also kind of a bitch as well. I've made an entire video on that explaining why I've been banned and all of these details. Make sure to check out the main channel as I've previously shown to you. And as usual, guys, make sure to trade based off data and not guesses.